Hello, traders, and welcome to the Friday wrap up, October 30th, 2015. Well, it is actually November 1st for me. I didn't do this on Saturday morning. I actually took Saturday off, went away for the day. But great to be with you. This is the Friday wrap up from last week's charts. We'll take a look at some price action and see what we can expect in the week ahead. So we got a lot to do today. Got some commentary, some news data, all that good stuff coming to you very shortly. Remember, this is brought to you through FXCL Excellence in Trading. Please come visit our website at fxclearing.com. All right, traders, let's get a move on. Let me introduce myself to you. My name is William Gilday, and I am your moderator for the Friday wrap-up, which we do every Friday after the New York close. Like I said, this is where we take a look at a bunch of charts, daily charts, and look at price action. Traders, I started trading in the year of 2006, and in 2008 I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, 9 days later, I came to Thailand for 3 months to enjoy a celebration. Well, traders, I'm in my 8th year, and I'm still in Asia, still in Thailand. Actually, still in the same city I started at. I'm still here. Absolutely loving living in Asia. It is a great place to live. The people are great. The weather is great. And having a great time. And the time zone is excellent for trading Forex because I can basically trade all 3 trading sessions and still get a good night's rest. I only do about 3 hours of New York. And now with the time change coming this weekend, it's going to be about 2.5 hours. And that's going to bring me up to about 11:30 p.m. And I start my day at 5:36 in the morning. So, yep, it's quite a busy day for me. But absolutely love it. All right. No, I don't sit in front of my computers all that time, my friends. That's why I have an iPhone. I have charts on my phone. I can go out and I'll put everything to alerts and all that good stuff, especially if I'm in a trade. All right, let's get the legal stuff out of the way. This is our risk disclaimer. Forex trading has a large potential risk, but also a large potential of rewards. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head on over to the commentary area, and let's just take a really quick glance here at how the markets closed. Surprisingly, the markets closed on the red in the U.S. session. The Dow 30 was negative 0.52. The S&P 500 was negative 0.48. NASDAQ was 0.40. And the small cap 2000 was negative 0.34. Surprisingly, the markets took a little flop to the other side, which was okay with me. If we look at the Eurozone, the DAX was up 0.46%. The FTSE was in the red at negative 0.54%. The CAC 40 was positive 0.24%. And the Eurostoxx 50 was positive 0.14%. And actually, it's pretty funny because normally when I do the Asia markets, they're actually trading when I do the market opening preview, which I do every day. And it's pretty funny to watch that I'm doing it and talking about it, and the markets aren't open. But the Nikkei 225 did close at the end of the week, positive 0.78%. The S&P ASX 200 out of Australia was negative 0.52%. The China A50 was positive 0.27%. The Hang Seng out of Hong Kong was negative 0.79%, and the Kospi was also negative out of Seoul at negative 0.23%. So that just gives you an idea of what happened on Friday after the close of all the markets. And a very interesting trading week last week. We had a lot of, I call them wobbleheads. And I didn't make that up. A friend of mine did, and I just kept it. I just thought it was very funny. Yeah, a lot of wobbleheads was talking this week. Good old Auntie Yellen spoke. The FOMC chairwoman, Janet Yellen. And then we had, of course, Draghi speaking. So the markets definitely had some catalysts to move around, up and down and all around. And they did. And they did. So we had plenty of stuff to move the markets along. And if you were in the right spot at the right time, you did well. The key is always, entry, right? Getting it. Make sure you get in at a safe spot. But now, the issue is to protect your position. And, are you going to put a 100 pip stop on that thing? Or are you going to put a 15 pip stop on it? And that is the issue. And folks, we need fundamentals. We need data. Data is what makes us pips and money. I usually don't use the M word in my videos, but if you're going to make money, we need data. Data is what rolls these markets and is what does the trick. So fundamentals is so important in our trading. However, I'm a technician. I trade charts. I trade technicals. I look at price action and candlestick patterns and support and resistance, and I use the Fibonacci tool and pivots, and I'm into harmonics, and on another set of charts I use Ichimoku clouds. I find them all helpful. I'm only trying to get an edge, right? We just want to get an edge in our trading to make the right decision. Do I win all the time? Absolutely not. No way. But I always looking to make that edge, to get in there and have more on my side of the opportunity to get the W in the win column. All right, so we got some charts today, and I think next week's going to be a great trading week. Got a full week ahead. Time changes. Well, it is actually Sunday morning my time. So in 4, 5, 6 hours from now, the United States will change its time, and we'll be somewhat back to a normal. Other than we start an hour later in Thailand. Before we would start in the European session at 2 p.m. Now it's going to be 3 p.m., which makes my nighttime a little bit longer. New York used to open at 8:30. Now it's going to be absolutely 9:30 because we're 12 hours difference. All right, enough of that talking. I can't believe we're at 7 minutes already. All right, let's hit these charts. Dollar Swiss. It is unbelievable. This is a bearish pair, and I know people have been all over with this pair. But the dollar last week just really built up strength. The FOMC statements by Janet Yellen the markets really liked what she had to say, and I think that was that they weren't going to raise interest rates at a minimum until December, and I think the markets really like that because I think the markets think they're not even going to raise it in December, and she's just saying that. And I think that's why that statement was so positive, was that they're saying the kickoff's going to be December. And I think the traders, the retail traders, me and you, and then the big guys, the hedge funds, are saying, no, it's going to be later on. So it's going to be into 2016. So it's pretty interesting the way that works. So, however, this is really, how are you going to trade this? Well, if you're, on a daily chart, of course, you got 2 down days there. And if you go down to a 15-minute or a 30-minute chart, those are some pretty big moves, right? Remember, these are daily candles. So, I look at this is a double top. We've outdone resistance, right? We've passed the previous resistance if you look left of the chart. So, I would look for this to come down for the next day. I would look for this to possibly Monday, Tuesday be a red day and then continue upward, which means if you fib that last swing, you can get a pretty good idea where you can expect this to take off. So, I just keep an eye on that. Let's take a look at the pound dollar. Pretty interesting pair. The pound dollar, in my opinion, is bearish. Lower lows, lower highs. It's had its moments where it's popped up there, but as far as I'm concerned, this is still bearish. I still just want to sell the pound dollar. The pound's had some bad data this week, and the dollar is just strong. I mean, it is what it is, but it is. And the dollar is just strong, and, the pound is getting nailed with data that's just not helping them at all. So, we're actually down to 54.27, which is up from where we were earlier, right? Because we actually was down to, 53.15, 52.65 on Thursday. So, quite some big moves here on these daily candles, right? You're talking over 100 pips. So quite some moves here. But my bias is we're going to remain bearish. All right, let's take a look at the euro dollar. I hope I'm not boring you all, but the bottom line is the euro dollar is bearish. It's been bearish. It's going to continue to stay bearish. It's hanging out at this 1.10 area. It's, just whittling and waddling around in there, and really hasn't been able to do anything, hasn't been able to break any resistance areas or anything like that. I just think it's going to continue. And I don't think it's the dollar that's necessarily doing it. I think it's just bad data coming out of the Eurozone. They have not had any fantastic numbers. So, Germany put out, well, I would have to say down the middle of the line as far as data this week, and the Eurozone's not doing anything spectacular. So, this is pretty interesting. But we're bearish, and that's the main point of this Friday wrap up, is to get an idea what we're looking at. So if you go into Monday and Tuesday, I would definitely be looking to sell the euro dollar. I remain bearish in the euro dollar. I've always been bearish in the euro dollar. Even when it went up those 500, 400 pips, I still was bearish in the euro dollar because I think the dollar is much stronger than the euro, to be honest with you. All right, let's take a look at the dollar yen. A dollar yen, now this is a great chart here, folks. This is really a great chart, and it shows you how, if you don't have a dollar index chart on your platform, there's plenty of free places where you can get live dollar index charts. But the dollar yen shows us what the dollar index is doing. It basically mimics it very closely. And what you can see here is sideways, right? It's sideways. The dollar is not getting any stronger. The dollar is just maintaining. It's did a bump up there, but came back down. So the dollar is just basically staying where it's at. And, they say the stock market's probably going to give us a 3% growth this year on year by the end of the year. And, if you get charts like this, I would have to agree with them. 2.5 to 3% growth on the New York Stock Exchange by the end of the year. And, I can see that. I would say we're more to see a 3% hike. A 3% growth year on year come January, and we get a report on the fourth quarter. So yeah, I think year on year the New York stock market's going to be in the green for sure. Well, let's take a look at the dollar CAD. I don't trade the dollar CAD a lot. I know a lot of people that have been really in this CAD to the bullish side. And of course, that was because of oil, and this is a commodity pair, so you really got to watch oil with this. This reacts really big to oil, and you can see where oil was up at that $50 mark for that week, and you can see all those red candles, right? And you can really sort of get an idea if you look at a newspaper and see what oil's at that current day, and then turn on your charts, and you can basically see if there's been movement in the oil of significance, and any significance is $1 and above, right? If you just take a look at that, you just have to say that oil really rules this pair, and you just have to watch it. Listen, there's no positive news coming out of Canada, right? There's no positive news there. So you're relying on the dollar, and we know the dollar is strong, but oil, is overtaking it because that is really all about the CAD. So that is what is going on there, my friends, with the dollar CAD. So watch oil, and you'll have a good idea where the dollar CAD is headed. Let's take a look at the good old Aussie dollar. I am bearish in the Aussie dollar. I think I've been bearish in the Aussie dollar for 2 years. So yeah, so we'll take a look here, and we can see that we're still bearish, and we're just on a lower time frame here. All you would do is just fib your latest swing and look to enter it short. I'm not looking to buy this, and I'm not saying that you can see where we had like 7 days, 8 days there of where they had blue days, up days, and that's fine, but it's definitely not something I would look at as a a catalyst that would change a trend. So we're going to continue to remain bearish in that. All right, let's take a look at the euro pound. I don't trade the euro pound. I use it as a tool, though. I use it as a tool, and if you look at this chart, you can absolutely see that the euro, believe it or not, is stronger than the pound. And last week you can see it, and it's pretty wild here, and the euro is weak last week, of course, because of the Draghi comments. Was that on Wednesday, I think? And it just sunk this thing. It just pulled it down really, really bad. So that's why the euro is so weak here. All right, let's look at the Euro Aussie. I do trade this on a regular basis. It is bearish at the moment, and this is just a fib of the swing, and I expect you can see the mean line there, which is those dotted lines, and basically just going to come on back down. And I expect this to continue to be bearish into next week. The thing with the Euro Aussie is, though, you have to trade it on a day-by-day basis because you just don't know this pair doesn't stay in a trend very long. It changes, goes back and forth all the time. So this pair is pretty finicky. But once it's in it, you can see that it stays in that trend 5-6 days, and then it'll give you a change of color of your candle unless it's going sideways. And you can see that in the chart on how that works. And you can see also that when it does go sideways, you can see that it stays sideways. Could stay for sideways for 2 weeks, right? 2.5 weeks. All right, let's take a look at the beast. The pound yen, pretty sideways price action. Nothing here to report. Nothing special here. It's bearish, and it's been bearish for quite a while. And we're hovering at this 200 exponential moving average, which this pair loves to do. It's got a history of it for years. That when it hits that 200 exponential moving average, it just likes to hover around there and hang out. And it is definitely doing it. And there's nothing here other than, the main point is it hasn't taken out any significant highs. And as far as I'm concerned, if you're going to trade it into next week, you're looking for a sell trade. Look for the sell trade. It's got Aussie New Zealand, and this just shows you how weak the Aussie is. And that's why we have this big downturn. The Aussie is just so weak. This week is just dumped like unbelievable. I really wish I was in this Aussie New Zealand from long ago, like 2 months ago. And kudos to those who have picked up on this and just took advantage of this run. This thing just continued to the downside and never stopped, and it's just moving on, and it's continuing to do it. And this week, I think we have Aussie interest rate decision, and they're thinking that there's going to be possibility that they're going to lower interest rates. So yeah, it's going to be an interesting, I think that's this week. So that'll definitely spark up the Aussie. And like I said, they're talking that they're going to lower interest rates. Here's Aussie yen, another pair that I trade regularly. It's bearish. It's been in a sideways price action. Not a lot of price action this week, except for Tuesday and Wednesday were really nice movers. So we're just going to hang out on that one. And my bias is to the downside. So any lower time frame charts that I'm looking to take this to the downside. I'd love to see this thing come down like this 82.70 area, and that would just be really, really nice. Come down to that 82.70 area, which is that next line of support, and just ride this baby. Now I trade on a 1 hour or a 30-minute time frame when I enter my trades, so I want to see that. But this looks really good to the downside. Just continue to sell this. And last pair of the day is our New Zealand dollar. Again, sideways, not a lot going on. And I'm really not interested in buying this. I want to sell this. If you expand this chart out, this is extremely bearish. The New Zealand dollar is bearish. I just do not want to buy the New Zealand dollar. I want to buy the US dollar in this pair. But last week, not a lot of price action, not a lot of stuff going on. So, and it's sitting at this resistance line. So we're just waiting for this to give us a bearish entry on our lower time frames. And that wraps up our charts. Traders, remember, this is brought to you through FXCL Excellence in Trading. Traders, if you would, please come visit us at fxclearing.com for your trading solutions. Traders, on behalf of myself, William Gilday, and our great friends at FXCL, we want to thank you for joining me for the Friday wrap-up, where we review daily charts for price action and what we can expect the week ahead. Enjoy your weekend break, and for those of you in the United States, enjoy your time change For those of you who like it and don't like it, I have to tell you, I'm glad I'm in Thailand. I don't have to deal with that time change. So it is the time that it is. All right, traders, take a great weekend. Enjoy time with friends, loved ones, and all that good stuff. And we'll see you on Monday for the market opening preview. Take care, traders. See you next time. Ciao for now. Bye-bye.